Honestly, I was gonna come in all hostile, but simply put, today I just made some trades that was it's just not going with the strategy, especially on Wednesdays for some reason. The other days seem to play out much better. Monday, Tuesday were nice and vanilla. This Wednesday was like the market is moving against the MACD. My bullish and bearish engulfing indicators, every time they hit off, it was just like mixed signals. And then also, because the market had such a big gap up, also while the market was trading, I wasn't able to see the chart, or I just didn't scroll up. So I didn't see that the chart actually started to break down to the point where I could have exited the position after this three line strike bear indicator. So I'll show you the trades that I did. I did three trades each on both platforms. All three were losses. So we're just gonna go into all of them, why I entered them, where I got stopped out, and let's just go from there. And I'll see how I could have traded it, but I'm thinking more and more I'm thinking not to trade on Wednesdays at all. But I'm seeing where there could have been some opportunities, some order block trades, but overall, it's not worth the risk to reward on Wednesdays from what I'm seeing. But let's get into the charts. So the first trade was a QQQ buy at 9:35. So at 9:35, and let's go up here. So it's on this 9:30 candle. So I entered at 311.53. So 311.53. I entered with 75 shares. So of course, because I don't like how Wednesdays trade, I went down in my position sizing, so I went with 75 shares instead of the usual 100 or 125. So I entered here at 9:30. Actually got stopped out at 10:36. So you can see I was right in the trade for a while, but because of the gap up, I just didn't even see that. While I'm looking at my charts, I'm thinking I don't have a good signal, when really and truly it was just me not scrolling up and seeing that the charts were actually above the previous days. So I'm looking here, I'm saying, what's going on? As you can see here, I'm looking here and I'm saying, what's going on? Why am I not seeing the rest of the chart? But then later down the day, I could see that actually I should have scrolled up and I would have seen that the charts was all up here. It actually made a three line strike bear indicator and a bearish engulfing candle, so I could have actually taken it out from there. But sometimes if you have a bullish move, and the MACD was still showing us bullish until at least here, so I could have actually looked at this and seen, all right, three line strike bear, MACD breaking down, let's take it to the downside. And this other candle, all of these candles could have shown me you have a three line strike bear, and you also have the MACD weakening. Both of those are enough indicators for me to say, yes, let's get out of this trade, right? So I got stopped out at $78.75 for that trade. So I got closed out there. That's where I had my stop loss. And I had my stop loss just a bit below where the market actually opened up. So I went down lower than the wick to, in case the market started to reverse a bit before going up, I would be able to just not get stopped out early. But I ended up getting stopped out a bit later after they kind of more accumulated buyers had people think the market is going up, and then they kind of flushed it down, right? So that was the first trade of the day. A loss to the buy side. I mean, I was up at some point in the day, but I didn't close out the trade fast enough. I decided to let it rock out. I was gonna close it actually early, but I just let it run a bit and went to do other things. So the second trade was at 9:51. No, that's at 10:51. So we're looking for the 10:45 candle. So at 10:45, I entered to the downside. That would have, after looking back at it now, that would have been the best time to enter to the upside. But the thing about that is that you can see the MACD kind of weakening. So if you're seeing the MACD weaken with my bias, that's indicator bias actually. I would not enter this trade to the upside. It's not giving me that confluence to say go to the upside, other than just like a candlestick pattern formation here. So that's the only reason why you'd enter to the upside here, or I would enter to the upside here. I don't have any confluence here. I don't have any bullish engulfing. I don't have any three-line strike bullish. I don't have any MACD pushing up with strength. So I wouldn't really enter this trade there at all. So I entered to the downside here as I saw more weakening on the MACD. So that was my bias, right? More weakening there on the MACD, and then I got stopped out on the next candle at 11:06 at 310.68. So I got stopped out for $23.50 there within a little over 14 minutes. So I got stopped out, and how I entered this trade was I entered to the downside here. My stop loss was above where the highest point of that candle if you have a sell position. So I trying to take it to the downside, tight stop loss. So in case it wins against me, I would be out, just like I was out here, for a total of $25 on that trade. So that was the second trade of the day. Third trade of the day now was at, what's this now, 11:15. 11:15. So I decided to go for a sell position again. Look at that. It's like I can't learn. So I entered for a sell position again and got stopped out within the same candle at 311. 311. So I enter to the downside here. So you still have weakening on the MACD. You can see the weakening on the MACD, and then the market was still pushing against that. So interesting. You have more selling pressure on the MACD, but it still turned out to be buying pressure overall on the instrument here. So that kind of tricked me. That's where you have indicator bias or confirmation bias. So you're seeing something, the chart is doing something, but because you're used to the indicator giving you a specific result, you go that way, but the chart is telling you something else, right? So that was the third trade where I was wrong. And the thing about it is that I'm using the same strategy for both instruments, the QQQ and the NASDAQ 100. So if I'm wrong on this one, there's a high likelihood that I'm wrong on the other chart as well. And I was wrong. So let me bring up the other broker. So here, enter the first trade at 9:36 at 12,803. 9:36, 12,803. So that's the 9:30 candle. 9:30, 12,803. 12,803. What else? 12,803.4. 0.4. And then let's bring it up again. And then I got stopped out on the 10:30 candle at 12,757.6. 10:30, 12,757.6. 757.6. That's on the 10:30 candle, just to confirm. 12,757.6. So I entered here to the upside, and you can see at 9:30 you kind of have a building of the MACD. You having a bullish engulfing at 8:45. So the market was kind of boiling up. So that's why I entered to the upside. And it also had bullish movement on the MACD. The MACD also had a bullish tilt. So I was thinking, all right, we're about to continue up. However, where I stepped my stop loss, it ended up getting hit out at 10:38 for a loss of $18.32. So that was the first trade. We can actually see that this MACD breakdown kind of reflected on the actual chart. So while the MACD was breaking down, the charts were breaking down until you had like a small red. These small red actually flipped to a bullish movement. So it's actually looking much better on the NASDAQ 100. So the actual index is looking better with the MACD versus the ETF that kind of threw me off, right? Interesting, because index printed a 3-line strike bull indicator. So you had a 3-line strike and also a bullish engulfing candle here on the index. However, on the QQQ, and this is the 11 o'clock candle, we didn't get that. Look at this. On the QQQ at 11 o'clock, I didn't get a 3-line strike nor a bullish engulfing candle. That's interesting. So because I'm generally looking at the QQQ and then making the trades on both platforms, I wouldn't have seen that. So I probably saw it print on the QQQ, saw the move on the QQQ, but didn't really take note of it. Like, didn't move to a trade on it because I didn't see it on the NASDAQ 100. That's very interesting. Okay, so the second trade was at 10:51. So at 10:51, when I got stopped out, I entered to the sell side. And these are going to be the same trades that I enter on the QQQ, basically, just on a different platform. So I entered at 10:51, so that would be the 10:45 candle. So 10:45, so the perfect time to take it to the upside. I entered to the downside. And what was the reason behind that? So okay, so I'm entering to the downside, seeing like the small peaks of like bearish movement on the MACD. So when these small reds start to form, you can be very early in the trend before some huge reds start to form, and this would have been a great time to enter to the downside. However, it proved to be wrong in this instant. So the first trade was at 10:51. Then it got stopped out on the 11 o'clock candle. So the second one over. So at 11:51, I entered the trade at 12.7330. Okay. 12.7330. No. 12.75330. 75330. Okay, so I entered to the downside here and got stopped out on this candle at 12.780.10. 12.780.10. 12.780.10, and that was at 11:03. No, 12.763.630. Okay. 7.630. Okay, that makes more sense because I wanted it to line up on the charts so I can see that the broker didn't take me out. It was actually how the market was trading. So this is where I got hit out. So I actually had my stop loss at 0.10, less than that. But I guess probably because of how fast it was moving, it just knocked me out. So this was the second trade where I entered to the downside with MACD kind of just starting to get red. So I was expecting it to pick up and go down. And we also have a bearish tilt in the MACD line as well. So I'm thinking, yes, perfect time to get in just when the trend is about to start. So I just entered to the downside with my stop loss a little bit above the previous candle, right? So this is where I got stopped out for a total of $3.88. So I try to keep the risk very tight, especially on Wednesdays. I just do not like trading on Wednesdays. So the third trade was at 11:15 to the sell side again. So you can see I was very, very stubborn. So at 11:15, I entered that one. I got stopped out. Same candle, the same 11:15 candle. So the first one was at 12.76 flat. So that was the first, that was the entry trade to the downside, 12.76 flat, and then I got stopped out at 12.78010. 7880.1. Okay. So I entered to the downside here and got stopped out as the market started to push up. So it was actually showing us bullish movement on the MACD. So could have actually rolled it up a bit. But even this, I guess this little bearish movement could have tricked us a bit. But overall on the day, we could have played it. I mean, it's not a smooth move like the usual days, but there was still some play to the Wednesday today. It was making lower highs, higher highs. So there was still bullish movement. I can't really blame Wednesday on this one. The only thing is that we had a huge sell-off in the morning before we started to kind of grind back to the upside. And at the end of the day, we closed up on the day. A little bit up, but still up nonetheless. If you had entered in the morning, you'd have taken a swing down to the downside, taking a lot of profit, taking a lot of losses, and then you probably wouldn't have even been sure that you would have gotten a move up. So I don't know. I don't know. I don't like Wednesdays personally. Let's see how tomorrow trades. I'm pretty sure tomorrow will be much better. I'll see you in tomorrow's video where we trade the strategy and it should play out much better. Let's see how it goes. I'll see you in tomorrow's video. Hope you like it. Bye bye.